When you deposit your funds into a retail FX brokerage, where do they go? Most of the time they go straight to the bank. But not always. Caveat emptor. Something really interesting, just when you think that you've seen everything. I've been suspecting this for some time, but I came across some concrete evidence of it just last week. Regulated brokerages that serve retail customers, MT4 brokerages, in regulated jurisdictions that have other entities offshore where they bring most of their clients from, which is a strange thing in itself. However, getting the funds into the brokerage, I found that they are, in some cases, actually circumventing the merchant services provider's risk management by having a specific system to intentionally transfer client monies into personal accounts of agents, and then they go into the brokerage. Isn't that astonishing?
Well, it's been going on for quite a while. If you go back to even the start of it, many, many years ago, you'd have a firm that wanted to be regulated, and that regulated firm would set up exactly the same company name which is not regulated. They would then market the non-regulated firm globally,
yes,
bypass the regulation, and allow money to flow in using any type of marketing they wanted to for the public to perceive. However, transferring money and using the affiliate as the intermediary, as the channel to bring that money in, is totally illegal.
It must be illegal, surely.
It's definitely a breach of AML.
That's for sure.
And I can't understand why the jurisdiction, the authorities and the regulators aren't getting onto it.
Nor can I, so I went to them about it. And in this particular case, it was SciSec.
Okay.
And they had no idea what I meant.
What, they didn't ask you any questions?
Nope. They didn't understand what I meant. Well, and actually, it's because when you think about it, exactly as you say, the setup of these companies is that you have 4 or 5 customers going through the regulated entity, and then the rest of them being done offshore. So the regulator doesn't know what this particular thing is, and they don't look into it either.
But you also have to understand the mentality of the regulator. The regulator themselves are not criminally minded.
No, they're not.
The regulator believes that everyone is going to conform to the rules.
They're administration minded.
Right. So you do have jurisdictions like the UK, like the US, like Australia, where the companies that are set up there, our mindset is we want to conform to the rules. However, when you get a body of people that don't want to conform to the rules, the regulator will not be adapted to understand what rules are we looking
that is exactly
that they're
right.
broken.
That's absolutely right. And actually that came up in a recent conference, an industry conference, that the general overview of people's perspective, and the people in question were industry leaders from all over the world, was that because of the administrative mentality of the regulator and the way that conforming to rules is the norm, especially now with bigger rules that are directed at all aspects of the electronic trading business, such as MiFID and EMIR, the European rulings, and you have Dodd-Frank in the US, which has been around for 7 years now. It's the good ones that get their name blackened and punished by a small little transgression, when you have companies like the ones that are laundering money through personal accounts and onboarding clients offshore and circumventing all of the rules, because they don't fall under the regulatory jurisdiction of anybody. They don't get their name. This gets taken as something which is either ignored or is accepted.
Well, I think that floats over. If you look at Western Europe, and Western Europe and the EU wanted to bring in a lot of countries from Eastern Europe.
Yes, they did.
Now, if you take Western Europe has been running for tens, hundreds of years, but in terms of regulators, it's been running for the last 30, 40 years. So the mentality of Western Europeans is they conform. They conform to the banking system, they conform to the voting system, they conform to normal ways of life. However, you take somewhere from Eastern Europe, Africa, Asia, Middle East, they are not conformists.
That is right.
And therefore they will look to say, how can I make a quick buck on the back of breaking the rules of the West?
That's exactly right. And this is why it was not understood. Cyprus, for example, is a retail-only hub for companies that do not have business in Cyprus. They base their operations there, and sometimes they are a business unit of a foreign company, more often than not, so that they can have the European prestige of having the MiFID oversight of the regulations. But there isn't there isn't any customers there, and the customers are in Africa, Middle East, Asia, so forth, Eastern Europe most of the time. Therefore, most of the actual way the business is conducted is by people from those regions towards people from those regions.
Right.
So most of the operations are not in Cyprus; they're offshore. Now, America, you can have as a US company multi-jurisdictions. However, the difference is if you are FXCM US, then you are an NFA member with 20 million capital requirement, and you must only deal with the US customers from that entity.
It has to be papered in the States.
Yes, papered in the States.
In the States.
In the States, nobody else. If you want to onboard customers somewhere else, you open up another branch and you submit your regulatory application to that regulatory jurisdiction, and you deal with it as a separate business unit. You can't. In fact, FXCM is a good example. They were in trouble in the UK for acting as counterparty to US customers.
Right.
So the NFA knows this and won't allow it. That's an easy step for SciSec to make. They could just say, right, anybody who is onboarding, who's having a SciSec license and putting that on their website and is onboarding customers on an offshore jurisdiction doesn't have a SciSec license anymore.
But SciSec doesn't have the appetite to clamp down on those. It is looking for revenue coming in.
That's right.
So what's it's encouraging these firms, say, we set up a head office here, we will regulate you, and then you can passport yourself through to Europe and other jurisdictions. In addition to that, you're going to have the status of a European entity, you're going to have the status of an office in Europe, you're going to be deemed and perceived outside of the world as a European Western model that conforms, therefore must be a good company to do business with.
Indeed.
However, SciSec is only looking for revenue. Who's the follow-on from SciSec? Malta.
Yes.
Malta and Cyprus, in effect, are running exactly the same model.
They are indeed.
And the West, and as far as MiFID's concerned, and the UK is concerned, they've allowed a backdoor to remain open for someone like SciSec and the Maltese regulator to float into Western Europe and bring all of those viral attitudes from Asia, Africa, Middle East into Western Europe and be exploited. And the regulator does not have a chance to follow them on because they haven't got the manpower or the structure.
They also cannot work out, that's very valid, because they also cannot work out where these bank accounts are. For example, PACnet was a big provider of payment processing solutions to electronic trading companies and gaming, all sorts of electronic online businesses. It's now sanctioned by the US government as a criminal organisation for doing just that, for transferring money to a third party and then to circumvent the risk management of merchant service providers. They're now out of business.
Right.
Liberty Reserve was a peer-to-peer payment services provider, no longer around. The owner is in jail for money laundering. Now, what's happening with these companies is the same thing, but they're just doing it themselves. The customer pays in, the payment goes to an affiliate in Thailand or somewhere. The specific examples I've got are of individuals in Thailand, and then it goes to the company. But the thing is, the European regulators do not have jurisdiction over a Thai bank account.
Right.
So
therefore the hands are tied.
The hands are tied. So unless they internalise everything into the local banking system and the local regulatory system, that will prevail.
Which means that the rule breakers are constantly looking, what are the limitations of the regulator? How long will that regulator take to get its act together? And then between 3 and 5 years or whatever period of time, they make a huge amount of money, get closed down by the regulator, get fined a few $100,000, and they set up again under another body.
Yes, they do indeed. And this is exactly the thing. That, in my opinion, needs to be highlighted to the whole industry. And I'm very glad we've been able to do that today. Thank you very much for joining me, Meir. Meir Velenski, CEO of Velenski Financial Group.
Thank you very much.
Thank you. I'm Andrew Saks-McLeod, CEO of Finance Feeds. Thank you very much for joining us here at Dukascopy TV in Geneva, Switzerland. See you next time. Goodbye.